Gold is going up because of the geopolitical and socioeconomic conditions that are not being reported in the media. And that is going to be, it is one of the major points of our economic update in this Trends Journal. Again, I'm brokenhearted to see where it's going here. You know, I don't want, because you think I want gold prices to keep going up because I have gold? I know why they're going up, and it's breaking my heart. All right? There's going to be a correction at some point, but I've never seen it rise this fast without a correction so far. You got a bunch of losers here. This is serious. And that's why gold prices are going up like this, and no one's talking about it.
In today's news recap, why silver ETFs are soaring and outperforming gold. Silver prices rallied and topped $34 per ounce, the highest level since October 2012. Falling interest rates and safe haven demand are driving the price higher. Additionally, increased industrial demand and supply deficit conditions are providing silver an edge over gold. The white metal is up 35% so far this year, outperforming gains of 19% for the S&P 500 and 26% for gold. Silver miners also spiked as they are the biggest beneficiaries of a surge in silver prices. These act as leverage plays on underlying metal prices and thus tend to experience more gains than their bullion cousins in a rising metal market. Central banks around the world, including the Federal Reserve and European Central Bank, have been cutting interest rates to combat slow economic growth. After holding the rates at a 23-year high for 14 consecutive months since July 2023, the Fed kicked off the new rate cycle era by initiating a 50 basis point cut in interest rates last month. This marked the first rate cut since 2020. The central bank projects 2 more rate cuts of 50 basis points in its final 2 meetings this year, due in November and December. It also indicates another 100 basis points rate cut next year and a 50 basis points cut in 2026, which means 4 rate cuts in 2025 and 2 in 2026. Meanwhile, the ECB cut interest rate for the 3rd time this year as inflation risks in the European Union subsided faster than expected. The central bank lowered the deposit rate by a further 25 basis points at its October meeting. A lower interest rate environment raises demand for silver, as precious metals do not pay interest, making them appealing compared to alternative investments like bonds. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And onto the markets today, they were flat. Oil prices went up, even though, the global economies will look like they're going down. That's why oil prices are so weak. But the Middle East war is going to keep ramping up. And there is not a peep from the prostitutes about the skyrocketing gold prices. Not a fucking word. Hardly a peep. Hardly a peep. Hey, it was the Trends Journal. That's right. The only magazine in the world that called 2024 a golden year for gold back on January 2nd. As we just went on the air, gold prices are $2,747 an ounce, up over $700 an ounce since we made that forecast. And it's a reflection of where the economy is going, and it's a reflection of geopolitics. But we won't talk about that because you're not allowed to talk about it on the mainstream media. You got to keep swallowing this shit. Remember, you're going to McDonald's. So there we got it. And Bitcoin is around $67,400 a coin, still in the strong range. Upside stronger than the downside. And again, like today with the announcement that joint Denny's closed 150 stores. They're closing everywhere. Again, week after week, we have businesses going out of business in your Trends Journal and people losing their jobs. Week after week after week. So when they're saying that things are solid, it's total. Warning, bullshit alert. And the bullshit alert is right in front of everybody's eyes. It's gold is shining. I've been at this for 45 years. Yeah. This book, Trend Tracking, far better than Megatrends, Time Magazine, shows how I became a trend forecaster when the Iranian conflict broke out. And they taught us to hate Iran. And I said, no, this is going to drive up gold and oil prices. Forget with the crap that they're selling you. And that's when I quit my job and became a trend forecaster. I turned $5,000 bets into playing the futures markets into almost $750,000 back then. I lost a lot of it, but I kept enough to quit my job and start to trend forecasting. I was a young guy just growing up. We are in the most perilous socioeconomic and geopolitical times in my lifetime. And again, when you're looking at the data, the Denny's closing down, you see same-store sales traffic at U.S. restaurants, according to Black Box Intelligence, was down 3.3%. And then when they're telling you that people are buying more, you're buying more. No, they're not. They're paying more to buy less. Because when you look at the increase in consumer spending, it's about, half of what the inflation rate is. So inflation is much higher. So you're spending more to buy less. Gold is going up because of the geopolitical and socioeconomic conditions that are not being reported in the media. And that is going to be, it is one of the major points of our economic update in this Trends Journal. Again, I'm brokenhearted to see where it's going here. I don't want, because you think I want gold prices to keep going up because I have gold? I know why they're going up, and it's breaking my heart. All right? There's going to be a correction at some point, but I've never seen it rise this fast without a correction so far.
In today's news recap, silver soars as gold hits yet another record high. Precious metal prices stormed higher yesterday as investors flocked to safe places to store their money amid uncertainty over the U.S. election and tensions in the Middle East. Gold hit a record high of $2,740 an ounce, and silver topped $34 an ounce for the first time since 2012. Gold has risen more than 30% this year, while silver is up 43%. The rise in precious metal prices has been driven by expectations of further interest rate cuts by central banks around the world, as well as worries about the U.S. election result and conflict in the Middle East. The U.S. Federal Reserve and the Bank of England are widely expected to cut rates again early next month, while the European Central Bank did so last week. The People's Bank of China has also got in on the act, cutting rates yesterday in a bid to revive the world's second largest economy. Lower interest rates tend to boost the gold price because it becomes relatively more attractive to investors. Bullion is also seen as a safe asset in uncertain times. With 2 weeks to go until polling day, the U.S. election looks to be on a knife edge, while investors are also nervous about developments in the Middle East. The outlook for gold is quite bullish, said Joni Teves, a strategist at UBS, who is tipping it to hit $3,000 next year. He added, there are a lot of risks around the next few weeks with the U.S. election coming up. We could be in for some choppy price action. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
And then we have, again, trends on the global economic front. When the economy falls, jobs go with it. There's over 100 weeks we've been doing this. Going out of business trends, which is not reporting. The debt to GDP levels is skyrocketing because there's almost $100 trillion of debt. You want to know why gold is going up? You don't have to be a genius to figure this out. There's no fucking way they're going to do this. And then you'll see what's going on in China. They're dumping more and more and more and more money in there to artificially prop up the economy, which is not going to be propped up because of their 3 years of zero COVID policy. And the place was overbuilt with the boom when they went into the World Trade Organization. And they made a terrible situation much worse, but they're dumping in, billions and billions and hundreds of billions of yuan. That is artificial. Their debt to GDP levels over 300%. So it's going to get worse. So again, we have spotlight on China's economic struggles, and the bigs keep getting bigger. What the ECB cut rates, but what does that really mean when you're looking at the downgrades of Germany and France, the number one and number two countries in the EU? This is serious times ahead. And of course, we have articles on that you're not going to want to miss, and it's by Gregory Mannarino. Why is no one talking about this? Maximum saturation. That's right. I asked him, what do you think is going to happen with the markets? And he told me. And we're on the same page. So you better prepare for the worst. And again, we have trends in technocracy. And who writes the technocracy? Joe Duran. Yep. One of his books, The Synthetic Devolution. You get it on Amazon. Another one. Yeah. AI, Declining Humans. Yep. This is serious. A whole section on technocracy, whole section on the Israel war, what it means, what's next, what to expect. Featured guests articles. Brace yourself. A tsunami approaches. That's right. This is by the Rutherford Institute, John and Nisha Whitehead, what they're doing here and what to expect with the government. The curious link between dementia and sensory impairments, article by Dr. Joseph Mercola, and trends in cryptos, trends I views, trends in geopolitics with the Ukraine war heating up and Zelensky's not getting what he wants. So watch out for a false flag before Election Day. They're going to ramp up.
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.